Good day, Robin here with your daily dose of smart stock insights. Today, we're diving into one of the most watched names in healthcare, UnitedHealth Group, ticker symbol UNH. The stock has been under pressure in recent months, but new signs suggest the worst may be over. And Wall Street insiders are beginning to take notice. At the center of this renewed attention is legendary investor Andreas Halvorsen of Viking Global Investors. In his firm's latest 13F filing, Halvorsen increased his stake in UnitedHealth, making it the fourth largest position in Viking's $31.5 billion portfolio. That's 3.56% of the entire fund. Why is this significant? Because Halvorsen doesn't chase hype. He's known for long-term, contrarian bets that often go against market consensus. And right now, sentiment in the healthcare sector has been anything but optimistic. So, what's driving this conviction? Let's rewind a bit. UnitedHealth stock has had a rough stretch, falling nearly 50% since April amid scrutiny over Medicare Advantage reimbursements, cybersecurity breaches at its Change Healthcare unit, and broader outflows from healthcare names. At one point, the stock lost more than $100 billion in market cap in just weeks, but the tide may finally be turning. On April 12th, UnitedHealth reported Q1 2025 earnings that, while not perfect, were better than feared. Adjusted EPS came in at $6.91, beating estimates of $6.61. Revenues climbed to $102.8 billion, also above consensus. The company reaffirmed its full-year guidance, maintaining earnings projections between $27.50 to $28 OR per share. Most importantly, CEO Andrew Whitty addressed the elephant in the room, the fallout from the Change Healthcare hack, and reassured investors that operations are stabilizing. The disruption is being managed, and UNH expects a return to normalized claims activity over the next quarter. That matters because UnitedHealth's scale and vertical integration, spanning insurance, data analytics, and care delivery, give it resilience that few others can match. Analysts are starting to agree. Barclays recently upgraded UNH to overweight, noting that the stock is oversold relative to fundamentals and offers deep value in a defensive sector. Bernstein echoed that sentiment, pointing to strong long-term demographics and cash flow strength. Halvorsen's move is confirmation of that thesis. While many funds are reducing healthcare exposure, Viking Global is leaning in, and that tells you something. Why does it matter to everyday investors? Because when a hedge fund manager with a reputation for spotting long-term compounders makes a sizable move, especially in a defensive name like UNH, it signals that fear may have peaked and fundamentals are back in focus. With U.S. healthcare spending still on a long-term growth trajectory and regulatory headwinds starting to clear up, UnitedHealth may be positioned for a comeback in the second half of 2025. So, is the bottom in? No one rings a bell. But when smart money starts buying in size and the earnings start to stabilize, you've got to pay attention. This is Robin, and this has been your quick, focused financial update.